Good afternoon and welcome to the National Press Club. My name is Larry Lippman. I'm the Washington Bureau Chief of the Palm Beach Post in the Cox Newspapers Bureau. I would like to welcome club members and their guests in the audience today, as well as those of you watching on C-SPAN or listening to this program on National Public Radio. Before introducing our head table, I would like to remind our members of some upcoming speakers. Tomorrow we will hear from Buzz Aldrin, Apollo 11 lunar module pilot and moonwalker, who will speak about man in space 30 years after the first lunar landing. On Tuesday, June 29th, Herb Scannell, Nickelodeon president, will discuss the state of children. And on Tuesday, July 13th, we will hear from Agriculture Secretary Dan Glickman. Press Club members may access transcripts and audio files of our luncheons at our website, npc.press.org. Non-members may purchase audio and videotapes by calling 1-888-343-1940. If you have questions for our speaker, please write them on the cards provided at your table and pass them up to me, and I will ask as many as time permits. I would now like to introduce our head table guests and ask them to stand briefly when their names are called. All head table guests are members of the National Press Club. Please hold your applause until all head table guests have been introduced. From your right, Matt Benjamin, business reporter, Investors Business Daily. Sonny Goldrich, senior economics correspondent, Bridge News. Merrill Guzner, chief economics correspondent, Chicago Tribune. Janet Novak, senior editor, Forbes. Mike McNamee, Washington correspondent, Business Week. Richard G. Ketchum, president, NASD, and guest of our speaker. Pat Campbell, CEO of NASDAQ Stock Market. Ken Esky, chairman of the Speakers Committee. Skipping our speaker for a moment, Paula Dwyer, news editor, Business Week, and the National Press Club member who arranged the lunch. Neil Rowland, Bloomberg. Anne Marie Kelly, regulatory reporter, Bridge News. John L. Hilly, executive vice president, strategic development, NASD. And Darren Gersh, Washington Bureau Chief, Nightly Business Report. Frank Zarb must have 9 lives. You may remember him as the energy czar who helped us get through the 1970s oil embargo crisis, or as a top official in President Nixon's Office of Management and Budget and the Labor Department. Wall Street denizens know Zarb from his tenure as the CEO of Smith Barney, and then of its parent, the Travelers Group. And throughout the 1980s, he was well known on the street as a senior partner at Lazard Frères and Company. He's done all that and served in numerous other assignments for 5 presidents, and he's only 64 years old. But Zarb may be most remembered for what he is doing today to revolutionize how the world buys and sells stocks as chairman and CEO of the National Association of Securities Dealers. NASD is the parent of the NASDAQ stock market and the American Stock Exchange, as well as the regulator of some 500,000 individual brokers and dealers and 5,000 securities firms. Our speaker arrived at the NASD in early 1997 and proceeded to shake things up. At the time, NASDAQ was reeling from a lengthy price-fixing investigation that hurt the electronic stock market's image and exposed some serious flaws, including that many investors were not getting a fair share for their stocks. But Zarb spied an even more ominous trend: the rise of online brokers, the arrival of newfangled electronic trading systems, and the desire of investors, large and small, to lower the cost of trading shares. Together, these forces threaten to erode NASDAQ's franchise. To remake NASDAQ as the stock exchange of the future, Zarb set about to create a global electronic market. He acquired the American Stock Exchange a year ago. Now he's discussing alliances with European exchanges and others around the globe. Just last week, he signed a deal to start up a version of NASDAQ in Japan. He led the charge to extend trading hours into the early evening. Before long, many experts believe, he'll move NASDAQ into the Internet, where it'll be accessible to individual investors around the globe and around the clock. Here to make sense of it all and let us know what's coming up is the man who fomented much of the electronic revolution. Ladies and gentlemen, let's give a warm National Press Club welcome to Frank G. Zarb.
Sounds like a guy who can't keep a job. You know, I was told that I had 25 minutes to speak, and we had to start at 1 o'clock. We couldn't start at 5 minutes to 1, and we had to be out of here by 1:59, and it was all because we have a television and radio schedule, and it kind of reminds me of my favorite story. I'm going to use up one of my 20 minutes for that. And it's a good Washington story. It has to do with a guy who was about to be hung. And as he got out in the gallows, the hangman said to him, "We've got 20 minutes for your last comments." And the guy said, the prisoner said, "I don't have anything to say." And the hangman said, "What do you have anything to say? We've got television cameras, we got C-SPAN, we got public radio. We're on a schedule. You got to speak for 20 minutes." And this guy said, "I don't have anything to say." Just then, there was a congressman in the audience, and he got to his feet and he said, "Will the gentleman yield?" And the poor guy said, "Sure, but hang me first." Okay, that's it. I quit. Okay, I'm going to kind of whip along here a little bit and not bore you with all the stuff that they gave you to read. You can do that at your leisure. But I do want to talk about the stock market of the future. And I don't have to tell you that we're in kind of a changed environment that's getting even more changed as we sit here this evening. And I've got to admit to you, or this afternoon, I've got to admit to you that we've got a pretty clear idea where we're going. Where we get a little bit cloudy is how we're going to get from here to there. And I think that's true for the industry. So let me share some of that with you, and maybe you have some thinking that will help us all. The main factor that's shaking up this environment, and I thank you for the credit you gave me, but it was a lot more than little old me that made all this happen. But the main factor is information. One word, information. Never before have so many had so much access to so much information so easily. So information is the driving force. You'll hear a lot about other aspects of technology. Information is the driving force. Technology is the enabler. Information is the power driver. Now, that change that we described, I'm going to describe here in the next few minutes, is leading us to a 24-hour global stock market. That's where we're headed. There's going to be instant price quotes and execution anywhere in the world at any time of the day for the major trading stocks of this planet. That is where we're going. Trading floors and paper, for the most part, will become obsolete. High-tech devices, some of which still to be invented, will be used by you, most of you still that young, to be able to get your quotes and execute your trades wherever you are at any given time without having to be on land technology. I was at Microsoft not too long ago listening to some of their product development people, and let me tell you, some of these products that these guys have on the drawing board will fit right into what I just said. Now let me say a word about stock exchanges. Stock exchanges will be fewer. They'll have a global capability through alliances and other forms of connections. Companies will be able to trade in pools of liquidity around the world, so that Microsoft will trade in a pool of liquidity here, it'll trade in a pool of liquidity in Asia, and it'll trade in a pool of liquidity in Europe, effectively trading around the clock. Information will be the driving factor. People will be able to get instant information related to Microsoft, related to its price, and be able to execute wherever we are. Some things to happen before then, but that's where we're going. Trading costs will come down, largely because of the enabler, the Internet. Liquidity will be up, largely because of these pools of liquidity which will be tapped. Raising capital will be easier, and that'll be good for developing economies. The driving factor for all these changes? Information. Technology and information glued together by a little thing called the Internet. It's breaking down walls, and it's creating a new investor class. Let's look at the investor class. 96 million people have access to the Internet in the U.S. today. By the end of next year, 1/2 billion in the world will have access to the internet. 50% of American homes have computers. E-commerce last year represented $102 billion of our economy. 8 million traders trade online with online brokerage accounts. 30% of individual trades counted by trades are done via the internet. That's trades, not volume. 45% of U.S. households own stock or has some relationship to owning stock. That's up from 10% in 1980. Mr. and Mrs. America from Main Street are on Wall Street. And that's going to have an impact. Just think for a minute. Just think for a minute. What will happen politically the next time there's a universal debate on investor qualities? Capital gains. Remember the old fat cat, get the rich guys richer argument? How is the tone going to be different? I'm not sure exactly how, but it will be different. The second driving force in all of this, although to a lesser extent, is called globalization, but globalization of commerce. Companies now want to raise capital where they do business. They want their capital raising and trading plans to fit their business plan. My goodness, what a dumb idea that is. I want to trade my stock where people buy my products so they can recognize my name. Investors want to see these companies wherever they live in the globe in increasing numbers. A global, electronic, interconnected financial world is coming. Existing markets today, all existing stock markets today, do not have the architecture or the systems needed to serve that next generation of requirement. Most traditional ways of trading stocks simply don't measure up to those standards. Again, what will we see? Instant price discovery, plus instant trade execution, fair and orderly and transparent transactions, low cost, well-regulated, no time zones. That's where we're headed, and we still need the tools to get there. Now, a word on some of the things involved. The middleman. Warren Buffett asked me the other day what was going to happen to the intermediary. Intermediary will live if the intermediary adds value. If the intermediary doesn't add value, the intermediary, whoever he is gone. Exchanges in the next world need to be cutting-edge providers, or they will not be in the business. There lies the challenge. Status quo would be easier. It's the current economic model. We kind of like to make money the way we're making money. There are a lot of people collecting rent for doing funny things on floors and other parts of the industry, and you're going to kind of disrupt that. When you disrupt that, people just don't like being disrupted. So it won't come easy. But I remember I lived through fixed commissions. A few of you here did too. Do you remember the end of the world was coming? It was a wonderful business for this. I was a young back office partner that came off the streets of Brooklyn and didn't know anything about the business, but I had some activity in the transfer department. And these guys were pretty much mostly rich guys that sold stocks and bonds to other rich guys. That's all there was in the business in those days. I mean, it was a wonderful business. Business got bad, we raised commissions. And if you broke that, if you competed with each other, you were excommunicated from the New York Stock Exchange. What a great business. You wanted to buy an odd lot, you had to go through an odd lot broker before you could get to your regular broker, everybody taking rent every step of the way. Wonderful, wonderful business. Obviously, it had to go, it went, and I can remember the end of the world was coming. More recently, the order handling rules. The new order handling rules, which were introduced, and most of you covered it. Again, it was going to drive everybody out of business. We were throwing people off the trading desk. We were going to stop trading stocks. Rick Ketchum and I had breakfast the other day with the CEO of one of those big companies who just 2 years ago were telling us how we are the evil empire destroying his business. And he said, you know, damn it, he said, those new order handling rules, they really help build our business. What's good for the investor, ladies and gentlemen, has always been good for the business. So these changes will come because it's good for the investor. They won't be easy, but it'll be worth the effort. A couple of words on NASD, NASDAQ, Amex, NASD regulation. We're trying to participate and we're trying to lead. It's not easy. We get credit for stuff that sometimes we didn't do that was bad, and sometimes we get credit for stuff that we didn't do and it was good. So we take one with the other. But we are trying to be a leader on a global basis. Let me just give you a word about who we are, for those of you who don't know. This little thing called NASDAQ started in 1971. It was the first electronic, automated, quote-driven system. In 1973, we did an average of less than 6 million shares a day. 1991, we did an average of 160 million shares a day. We're now about between 900 million and 1 billion shares a day, with 1 billion shares being a fairly regular thing. So in 1973, we did 1/2 of the daily volume in 1 minute today. You think that doesn't say something about what's happening to the business and the participation of the total world in our business? We have a capacity now for 2 billion shares, and we're engineered to go to 4 billion shares a day. We have a website with 24 million hits a day, 24 million hits a day. If and when we ever go public, I hope they rate us as some multiple of hits to our website, which isn't too strange these days. I mean, people do that. We are upgrading the NASDAQ stock market big time. We're going to real-time quotes from a 15-minute delay. We're going to provide traders with an ability to trade through our website, so that there won't be terminal when you come up to a NASDAQ website. You'll go on to your broker with some requests and some requirements. We're going to have a new NASDAQ screen. It will all be more investor-friendly. We're reinventing the American Stock Exchange. As you know, we bought the American Stock Exchange and closed the end of last year. It was a rational idea and a rational choice. It simply said that there are a profile of companies that trade better with a single market maker. Companies that are growing, some of the mid-cap companies that have lesser float, they need the love and care of a specialist. While in our view, the bigger companies, the IBMs and the General Electrics, along with the Microsofts and the Intels and the Dells, belong probably, not always, but probably in a multi-market maker environment. With that in mind, we have been re-engineering the American Stock Exchange, and will introduce this year some major changes, including an electronic floor, which will impact the quality of the market. I won't get into that here today. We are adding new products. We will be adding new index products, and of course the options market will continue to grow. International. I'm going to whip here pretty quickly now, and we can get back to some of these in your questions. International. Joint ventures and alliances. And we're kind of learning as we go. We kind of sound pretty smart when we sign one of these deals like we did last week. And we kind of think we know what we're doing, but we've got some fears and trepidation. And because there are lots of things happening here. So we're kind of feeling our way along one step at a time. One thing we've learned. In our business, you're more valuable when you share and when you're shared with, as compared to protecting your monopolistic capacity. The traditional stock exchange model says, come trade with me, do your IPO here, and we'll lock up your trade flow within our four walls, and don't let anybody else have it. That's the traditional approach. We've taken a little different approach. We've said that it's good for our issued companies if we share that listing with pools of liquidity in Hong Kong, in Tokyo, in Australia, and in Europe. That makes us more valuable to that issuer. And in return, we also say to our investors, we'd like to show you product from Hong Kong, from Japan, from Australia, and from Europe. Not a very complicated idea, is it? Seems to make kind of good sense. That's where we're headed. It's a rearrangement. It's a rewiring of the circuit board. It doesn't come easy. And we're going to have some joiners, as we've had in Japan, and a lot of interest in other parts and other markets as to how you do it, which way you do it. So we'll see more of it going forward, but it won't come overnight. The wrong model is the monopolistic model and the idea that we could go into these other markets and dominate those other markets with our model. We're going to go in, we're going to trade those stocks in our model. Wrong. The right model is to share and be shared with. Maybe we're wrong. We'll see. We have signed an agreement with a great partner in Tokyo that I think is first class, and we are going to head toward starting a NASDAQ stock market in Tokyo, and that means effectively that we close, let's say we close at 5:30 here, or let's say we close on time and reopen at 5:30, and then we trade to 9 or 9:30 in extended hours. Then Tokyo picks up the book at their opening hours, 9:30 or 10 o'clock in the morning their time, and they trade for their trading day in the same NASDAQ 100 that we've traded here. So the pilot we're going to run with is they will trade our NASDAQ 100, and we will show them to Japanese investors, and we will allow them to invest in all the NASDAQ companies when we're open during the course of the regular business day. That's the beginning. We have tasks. We've got to get from here to there. We've got a lot of work to do. We've got our NASD regulation people on their way to Tokyo as the next meeting so that they can sit down with the Ministry of Finance guys and say, how do you regulate this and how do we regulate it so that we have a bulletproof integrity system in place when we have our market system in place. I won't get into Hong Kong, Australia, Shanghai. We are doing things in all of those locations. We are having discussions in Europe, which I will not talk about here today because I'm not free to, and see where all that takes us as we go forward. Again, our formula is simple. Expose our companies to other pools of liquidity, expose our investors to companies from the outside world. 2 points. One is that we are more valuable as an institution when we do that. It just happens to work out that way, and that's good. Secondly, culture and nationalism are real problems, because they really are problems. You not only have to form an alliance and be able to deal with the language and the currency, but now you've got cultural questions and you've got nationalism. You know, the local stock exchange is the icon. You know, you don't give it. Well, what's happening is bright economic leaders in the world who are government officials and ministers are looking at this and saying, now wait a minute, the health of my economy is one hell of a lot more important than protecting this national monument called the local stock exchange. Big change. If it continues, that's going to be very, very important. In the new stuff category, or the work in progress category, which is also new stuff, financial futures, we are doing some work there, and we are in discussions with a group of member user firms of size. They're talking about an electronic financial futures marketplace where the investor can come through one portal, our website, and be able to do things in that category. That's work in progress. Our organizational structure is work in progress. You've heard and you've read, and I've learned a long time ago that one way to control the leaks is to tell the story. We are looking at ways to reorganize. We're looking at ways to potentially spin off regulation into a separate, well-funded company that's well-capitalized and has a stream of revenue so that it can do a first-class job going forward. And that will free up the markets, the NASDAQ market, to be a stock company. We're looking at that. Obviously, the public offering is one that hits the table and people are looking at. All that being measured, all that being looked at as we go forward, but it's work in progress. And we have indeed crossed our mind that it might make some sense, because some of the members have told us to look at it, might make some sense someday to join our regulatory company with the New York Stock Exchange regulatory company, have one standalone regulator co-owned by the markets, reducing costs, making sure that the revenues are used to increase regulatory technology, to be a better, cleaner, clearer regulator with less conflict of interest in both of these markets. May work. And was something we, again, is stuff in progress, and we're looking at very seriously. If it does good for the investor, we clearly should look at it, and we should look at it very seriously. The conflicts between the market and the regulator, you heard some of that yesterday from Laura Unger. It's a never-ending story. We did Optimark. We were told it was a conflict. New York Stock Exchange does things in enforcing its 390, and they said it's a conflict, so there are a lot of things happening there. Extended hours. There are three types of people on extended hours. 1/3 who don't want to do it, 1/3 who want to do it, and the other third who want to do it but. Those are the three. We're early days. It'll come. Investors want it. Investors will have it. It'll come. Our own view is that we'd like to see it come next year. We're certainly later, much later this year. Next year, we get close to Y2K. We've got some work to do. We're looking at facilitating the small broker-dealer so the small broker-dealer is not left out of this new wave, and that they do not have to make a major investment to participate in the after-hours segment. So a lot of things need to be done. We'd far prefer to do this in a coordinated, organized way along with the rest of the industry rather than to make it a hot dog, let's compete issue, and that's the way we are articulating our position. On June 30th, to its credit, the SEC will hold a summit, and the summit will ponder these questions of how we get from here to extended hours, what are the ups and downs, and what we do about it. I hope that that will result in a concern for the quality of markets so that when we move with quality and we move together. Now, I can't leave the stage without talking about one of my more interested subjects. It's a very interesting topic at the NASD, and it has to do with competition between exchanges for listings. That, if you didn't get it already, was kind of a subtle hint that I want to talk about Rule 500. Maybe not too subtle. You all know what Rule 500 is. Rule 500 simply says that when you list with the New York Stock Exchange, you cannot leave. When I ran a public company, when I took it over, it was a listed New York Stock Exchange company. There was no way I could move it, so no company's ever moved. That's by rule. Now, when you want to move off the NASDAQ stock market, if we don't do a good job for you, you can leave next Monday. And that's the way it should be. It just should be that the companies should have choice, and the market should work hard to keep their companies happy, or else they're going to lose them. Simple answer to all this. Rule 500 and similar barriers should be removed 100%. Not partially, not halfway, not with a booby prize, 100%. I hope it'll happen voluntarily. If not, I don't know, federal regulators, the courts, Congress, I don't know, anything can happen in this new democratic world of finance. A note on ECNs. ECNs are here. It's the American way. There's a way to make an extra buck, and some bright entrepreneurs get together and they form an ECN. They form an ECN by Larry and I, who will both have big trade providers. He gives me his trades, I give him my trades, we match them up, and then we go to the rest of the world, and you can have what's left over. I overstated that. I overstated it. I have no problem with people that are going to follow the American dream, and this, to a great extent, is that we do have to worry about some elements of the market having more advantages than others, and that's the way it stacks up as of today. That has to be remedied, and I think the SEC is fully aware of that. And we have to worry about ultimate fragmentation of the market, where we don't have a central place where all trades are registered so that the itty-bitty investor can have an opportunity to see what the market really looks like, not just what you want to keep left over for the market to look at. That's a policy issue which will be looked at seriously. Okay, and in conclusion, I once had a speaker at a college commencement who was awful. He was a guy, you didn't recognize his name. He just went on and on and on and on. And I was just slinking. These kids had champagne. It was an evening commencement. And they were coughing and they were sneezing and they were rattling their chairs. And when he said, in conclusion, there was a standing ovation. So ever since then, I look at the audience when I say in conclusion. Where are we going? We're going to have stock exchanges with a redefined purpose and brand new architecture. Circa 2005, or maybe sooner, we'll have real-time information. It'll be real-time execution. It'll be global. Stock markets will be electronic, they'll be paperless, and they'll be linked. There'll be fair, transparent markets via international technology and the internet. We'll have much faster executions. We'll have issues that are listed or available in multiple markets and multiple pools of liquidity. Our cost of trade will be much, much lower, and the investor class with clout, that investor class with clout, will grow. The end product, done right, growing companies, growing economies, growing creation of jobs, growing opportunity for everyday people, kind of everyday average people from Main Street, to share in the wealth that they've helped to create. Getting to and from that destination ain't going to be easy, as we used to say in Brooklyn, but boy, it sure is worth trying. Thanks very much.
Okay, we're going to do our little bit. And here comes the itty-bitty investor. You said if and when we ever go public, I hope they value us on the number of hits on our website. Do you see an IPO in NASDAQ future? And if so, how far away?
You know, in the Q&A preparation, that was one of the things that Terranzano said was sure I was going to be asked. Look, it is one of the questions being raised, and it's obviously something that would have to be looked at thoroughly by our board and by the regulators, but the notion of having a marketplace with the ability to raise capital that's going to be required for this intense technology investment going forward, and to allow the participants of the marketplace to have an ownership, it seems to us to make some sense. Whether we can get from here to there and when truly is an open question, but it is a serious look as part of the overall question of separating the companies from market and regulation.
You touched on this during your speech, but this question asked, if the future is electronic, why did you buy the American Stock Exchange, which was low-tech and losing market share?
That's a good question. The American Stock Exchange was, like all floor-based exchanges, low-tech. It is going to be higher tech before the end of this year as we introduce the new specialist book, which will be the only one of its kind anywhere. A specialist market, as we did, just a little background, when we had the 21A report and the new order handling rules and new standards for NASDAQ, there was a population of companies that became almost orphaned. I think we probably cut 150, 160 companies from the NASDAQ market over the last 2 years, just kicked them off. Now, some of those were viable companies, but they didn't meet our standards, and others couldn't keep more than one market maker interest because they don't have the float, they don't have the trade flow. There's got to be a home where those companies can be loved and grown. The single market maker specialist is the place for that kind of market. The index product, there's a place for the index product in that market. And there are others who simply want to have a specialist to kick around every day, and so they ought to have the choice. And so long as it's made into a viable entity that has its fix. The problem with not only the American but the other regionals is that they tried to be a little New York Stock Exchange. How the hell do you compete with that kind of a strategy? You want to have your own defined part of the marketplace, and that's where we're going with the American.
On Rule 500, you said the courts might play a role. Do you plan to file a lawsuit? Do you know of a coming lawsuit, or do you know of a coming lawsuit on this issue?
You opened it up. You think I opened it up? You mean if I wouldn't have said it, it wouldn't have been asked? Probably. I don't know. You know, my board will decide that. We'll see where we are. Board has a fiduciary responsibility to its members and its issuers, and it has to look at where we are at any given time, and look at that particular option. But we'll see what happens here over the next several months.
I don't want to let you off on this one that easily. Are you going to make a recommendation?
You're an agent here, not a principal.
Are you going to make a recommendation to the board on this issue?
My recommendation to the board is that Rule 500 and any rule like it has to go. If this market and these markets are to thrive in the interest of, and I really mean this, it sounds like a little self-serving, it is a little self-serving, but in the interest of the investor world and the issuer world, those kind of old-fashioned, obsolete barriers, no matter how they're dressed up to resemble some sort of good, are there to protect a monopoly. And wherever we find it, we ought to do what we have to do to eliminate it. I hope it doesn't get to what you're suggesting. You can't ask any more questions.
As president, I get that prerogative. If you create a standalone regulatory company, how will it relate to the SEC?
Well, you know, Arthur Levitt, in reaction to some of the stuff that's been going on, has said that he has no problem with this model that I just described, so long as the regulator is properly funded. And I've got to tell you, the model we're looking at, which is going to change a bazillion times before you see it, has a very well-funded regulating company going forward, much, in a way, in a lot of ways, better funded than it is today. So I think the regulators will applaud it. The other question is the conflict. You know, you've got, you know, there are those that say that Rule 390, if it weren't a rule in place, would still be enforced by New York Stock Exchange regulators. I really don't think that's so, but it's a perception. And if it is a perception, it should be eliminated.
You mentioned that there will be fewer stock exchanges in the future. Is this good for the trading public? Is there a need for any stock exchange in the future?
Well, there needs to be a place where you can get the bid and ask and get the fair bid and ask and information regarding the bid and ask. That you need to have. You could also use, if that place can get you to the bid and ask, or the best bid and ask, and also get you then into your trading mode, that would be even better. That facility needs to be there. Do you need to have a room, a building, called a stock exchange? No.
Well, I can bid and ask on eBay as far as that goes on for anything other than stocks. I mean, is that what it's going to be like, just all electronic? I mean, is there going to be any kind of a company?
Sure it will be. People have to make markets. They're going to risk capital, and that's going to be impressive. But what you can now do what you can do in that environment, you can do either physically on a floor, or you can do upstairs in your office, and you'll have a choice. And some of these markets that have already gone to electronic around the world, like Hong Kong, they don't need to be in this room. They're all in this room with their computer because they want to be in one place, one physical place. What they do on the floor, they could just as easily do upstairs. And yes, that's where we're headed.
These are two related questions. What will need to change with respect to monetary policy in the globalized new trading environment you envision, and will that environment eventually lead to a worldwide currency?
I don't see a worldwide currency. What I do see is a lot more automatic currency translations in this trading process, so that the ease of trading from market to market with the currency of your choice will simply be made easier. And we've got some people looking at the technology to get that done as well. I don't see a united currency for the world, at least not in my working lifetime. Some of you may say that's not too long, but who knows?
A few of these questions are similar. With all markets extending their hours, how are traders going to keep up with the load?
First of all, the extended hours, as I've said a few minutes ago, the so-called 24-hour clock doesn't mean that Goldman Sachs and Merrill Lynch and Smith Barney need to be awake at the trading desk for Microsoft 24 hours a day here in New York. It simply means that they will trade up to a point and then hand that book off to Goldman Sachs, Merrill Lynch, and Smith Barney in Hong Kong, along with Nomura, along with Daiwa, along with Japanese market makers who will do the same thing. Now, obviously, that'll be for the largest companies and not for all the companies. Now, the problem is the period between the time we close and 9 or 10 o'clock at night when they open, our time when they open. And that's going to be a time when people, particularly in California, want to go home, and they're online trading anyway, and they're going to want to have access to their accounts. How long it takes to get that done so that there's enough critical mass in the marketplace to have a viable market, I think we're all asking that question, and we all want to see how it works. But we should be running some pilots here, certainly after the first of the year, to see how it does work.
You mentioned that this would affect the larger companies. These two questions go to the smaller brokers. Let me ask both of them, and you can pick and choose out of that. Small brokers say NASDAQ hasn't thought through the manpower and technical needs for extending trading, and that you'll lose support as a result in the upcoming NASD election. Is that true or false? And most NASD members are small businesses employing fewer than 10 people. Because of the cost of hiring new staff to deal with extended hours, they oppose keeping a NASDAQ open into the early evening. If you would go ahead with this, won't your smaller members scream?
Yeah, I think the smaller members do have a concern, and I have the same concern. I don't think we should enter this thing and disenfranchise the smaller broker-dealer. And there are thousands of them out there, of smaller broker-dealers. And one of the things they don't know is that Pat Campbell and one of our members of our board, who's a small broker-dealer, have been working together and talking to some of the clearing firms. And before we go live, I would love to have, and we probably could have, a system in place where most of these small broker-dealers clear through another firm, a major firm, a Donaldson Lufkin or a firm of Bear Stearns. These firms can and will provide a service for the customers of the small broker-dealer, so that the small broker-dealer will have every bit of opportunity to trade in extended hours, as will any other firm's customers. Similarly, if our website is developed the way we are now, have it on the drawing board, that same client will be able to get up into our website and then portal to the small broker-dealer to execute an electronic trade, rather than that small broker-dealer having to put a big thing in place with a lot of capital investment. So we are very concerned with the welfare of the small broker-dealer, and because it's a big part of the market, and we should be. And we're gonna have to make sure that that's attended to, and these are kind of some of the things that we're working through.
Let's talk about Japan a moment. How will NASDAQ Japan be launched? What are your expectations for it? And it is often said that the Japanese market is closed. What is your opinion?
The launch will be, we've signed a planning, an agreement with a partner, SoftBank, who are terrific, where we will jointly own a planning company. That planning company will be used over the next months to work through the systems and the regulatory matters to get this thing up and running. There are obviously political issues in this, and we're going to have government help. It's our view, my partners and our view, that at the end of the process, the government is more concerned with creating jobs and growing an economy, and less concerned with preserving the old system and the status quo. Now, having said that, we have to be sensitive to the old system and try and work with it rather than to become a threat. That is part of the challenge that we have to work through, but it's there. I mean, everybody can see it's there, and we have to deal with it. But I have every confidence that we will have a NASDAQ Japan type facility in Asia before the end of next year.
Following up on that, and you mentioned the government officials, how have government officials and brokerages in Japan, Hong Kong, and Australia reacted to your initiatives there? We've done a lot of work in Hong Kong with the government officials, and they were completely open to this. I mean, really embraced it thoroughly. Australia, I don't know the answer to that. You'll have to get John. You'll have to call John Wall to get an answer from that, because he's been working that. In Japan, we're at the beginning. I can tell you they were very courteous and heard us out. Keep in mind now, we're talking about people making markets in Tokyo would be who are currently members of the NASD, all of them, including Nomura, and members of the Japanese Broker-Dealer Association. So the companies making a market are now members of both associations. I hope and I believe that will help accommodate the political process. Rich people are not always the smartest investors, and the collapse of First Holdings and the Fed's intervention proved this was true. Aren't you concerned that the speed of high-tech trading might increase the risk of major scandals? And a related question, isn't it healthy for markets to close down overnight so that stampedes may lose their steam?
Boy. Next question. I never think it's healthy for markets to close down. I mean, this concept that it's good to close some of the exits when the fire starts, I never could understand. So I have never been a fan of interrupted trading day. It is exactly the wrong thing to do when you do it. We had this experience in the last year or two when we had the circuit breakers tripped. You could see that the first circuit breaker set up the stampede for the second circuit breaker. It was so obvious. So I can't say that I have any sympathy for that notion. Secondly, keep in mind the model we're talking about is 24-hour trading for those companies that have critical mass, U.S. and others, that trade in our markets and then get handed off to another market. Now, you don't want to do it with a lot of thinly traded stocks, nor do you want to do it in an environment that the trade is going to be so thin that you have no liquidity, and as a result you get vibrations in stock price that are unhealthy and dangerous. And going to your first question, we always worry about scandals in the marketplace, and any kind of time there's a new world, a new event, a new thing, day traders and soccer mom is doing day trade, all of that we always worry about and try and grab onto it when we do and put it into a context and survey it and fix it. And if somebody breaks the rules, get after them. That's what we try and do. We don't think you not make progress, not give some investors access to the market because you're worried that someday there could be a scandal. It's a little bit of a difference, but generally speaking, I think it describes where we are.
If the new stock market gives all investors access to all information all the time, will the army of 6- and 7-figure brokers disappear? When that red light comes on, that's when we...
No, I thought that was a jettison thing. I could fall through some trap door here. The 6- and 7-digit brokers?
Yeah. In other words, if everybody has information all the time, we really need all these high-priced brokers.
I guess they mean stockbrokers?
Yeah, I guess so.
Huh? Salesmen. Oh, salesmen. Oh, okay, yeah. I think salesmen are, and I'm the only guy around that still, I love stockbrokers. When I Smith Barney, and Bob Jones will tell you, we had lots of great stockbrokers, really quality people. But I want to tell you, and he remember you know exactly what I'm talking about. We had, at one moment in our history, an army of stockbrokers who really added value. They really added value. And those stockbrokers are going to survive just fine because they did more than just transfer information from the research department to the client. The ones that just transferred information from the research department from the client had better go to plumber school, if the plumbers will take them.
Well, I guess we're following up on that this question, and maybe that last answer answers this one. With E-Trade and Ameritrade rapidly stealing customers from Merrill Lynch and Smith Barney, how will large brokerages fare in the emerging environment?
Well, I can't speak for their strategies, but I know these guys, and they're smart guys. And they look at emerging markets and decide, how do we get our share back of that emerging market and beat the other guy? So it'll be a horse race. But keep in mind, these are characters that can go around the world. So they can tap into a much greater pie than they currently have today. The business for those firms going forward, it seems to me, if they do it right, is incredibly good because you've just begun to see individual investors in China. This week's Economist talks about 20% return on equity for private Chinese companies as compared to other companies. Private Chinese companies, they're companies, and we now have 3 on their way to be listed, 4 on the way to be listed on the NASDAQ stock market. John Wall and I were in Shanghai. We sat in a club up in Shanghai having lunch, and there's a guy sitting there who looks like a young Bill Gates, and he's got a technology company, and he's talking to us about listing it on NASDAQ. The world of entrepreneurship, and when Premier Zhu was in New York and visited us at the market site, and that was incidentally the only stock exchange he visited in New York City, he wanted to talk to me about venture capital. He wanted to talk about venture capital funds, exit from how venture capitalists exit. This is going to, over a period of time, there's going to be a whole new world of activity so that if this happens the way I think it's going to happen, Merrill Lynch and Smith Barney and these companies are going to be trading in different parts of the world, as will Nomura be trading in the U.S. and Tokyo and also in these other markets. And that's, I think, where we're headed.
What was that young Bill Gates' company's name? We have the obligatory Y2K question. How well prepared are the American Stock Exchange and NASDAQ for Y2K? Can you guarantee the investing public that there is no cause for alarm as we enter the new year?
Yeah. We do think that we're in good shape, and we are. And I think our regulatory people have been on the case, and sometimes without being embraced by those cases that we're on. But it's been a very tough regulatory surveillance, and I think we're going to be okay. Now, having said that, we have a little thing we called, and Bob, you'd enjoy this, we call it internally the Green Berets. within our little company. And it's a team of people cross-trained so that, God, I don't know what's going to happen. Some vendor is going to screw up. We're going to have to parachute some people in to plug a leak. So we're prepared for something happening, but we think by and large the securities markets are in pretty damn good shape.
Do you think politicians in this town really comprehend the global and electronic revolutions transforming the securities industry?
No. It's a little glib. There are some who really do. I mean, there's some who understand it, have worked with it for a long time, and frankly, some of the staffs who have really been close to it and have the time to stay close to it and spend, we've had staff up to our Trumbull, Connecticut market site. We've had them in New York. They call and they want to talk about online trading and some of the regulatory aspects of online trading and the know your customer kind of thought through process. And so there's a lot more that goes on than meets the eye. Some of the members do know, but by and large, the staffs of a lot of these members, I think, do a first-class job, and they do then, by indirectly, do get a good awareness of the direction we're headed in. I don't think you single them out. I don't think the universe out there yet comprehends the extent of change we've had and the extent of change still to come. It's almost too much to absorb for us old guys, because the change from where we've been just a couple of years ago to where we are, as one of my board members told us the other day, because we had a strategy session for the board that John Hilly kind of ran, and we used the word evolution. Well, evolution was immediately shot down by this board member. He said, "Man," he said, "you got a revolution here. You don't have time for an evolution."
We've talked about Japan before. This question is, why do you think Japan's efforts to invigorate their IPO initial public offering market will be successful given their society's conservative approach to business development and entrepreneurialism?
Well, I'd like to introduce you to my partner called Masa-san, and let him you ought to invite him here to speak the next time he's in the U.S. And when he's finished, if you still ask the same question and he hasn't, I would be really, really surprised. There is an emerging class of truly bright people that are looking at the next environment in Japan with a full recognition that unless it joins the capital revolution, it will not have an economic recovery. We think we can probably prove, I'm not sure where we got this number, but about 20% of all new jobs since 1990 were created by a NASDAQ company. Now, I told that to some of the government officials in Tokyo, and to them, who have responsibility for economic welfare of people, that becomes a compelling story. And it helps to overcome some of the conservatism. Now, one of the things we're going to have to do, particularly in Japan, is demonstrate that we have bulletproof control over the regulatory process because of what you just said. And we intend to demonstrate that that's exactly what we're going to have.
Who's going to enforce suitability rules when anyone can go on the NASDAQ website and trade instantly?
Well, okay, we don't run away with that idea. You can go to the NASDAQ website, and the NASDAQ website will say, you want a quote? We'll give you a quote on Microsoft. It's the best quote. We'll give you the best quote. And then the box will say, we want to trade. And you'll say yes, and we'll say, what do you want to trade? And you'll say, my primary broker-dealer, which you already have pre-registered with us. And your primary broker-dealer has been geared to take the pass. So we pass that primary broker-dealer. You'll go into his system, and he will decide whether you have the money to make your trade and execute or not execute, all within a matter of seconds. In the small broker-dealer's case, if it can't happen because the small broker-dealer is so small that it can't happen, it'll go through his clearing company, which does have the muscle to make it happen.
Mr. Zarb, we want to thank you for appearing here, and I have some parting gifts, a certificate of appreciation suitable for framing, and the highly coveted National Press Club mug, which in an open trading market, namely eBay, went for about $25. So anybody will buy anything. I have one more question for you. Arthur Levitt was here a few weeks ago, and this question kind of goes to his comments. Why don't regulators have more of a sense of humor about the tongue-in-cheek ads for online brokers?
Well, they do. They just don't show it. But it is true. You know, online ads, once you become a promoter of online activity, you take on a new responsibility to warn your clients about the risks, which means, Mr. and Mrs. America, if you're going to go online and you really know what you're doing, and people who are going to trade symbols because they happen to be moving, you'd better go in with limit orders. Well, we ought to know that when the music stops, you're going to be left holding the bag. If after you know all that, you want to go ahead and do what you want to do, then this is America. You can do what you want to do. And you know, if that was your last question, I'll end by saying that when I was here the first time, this is my second time here, I was kind of a young energy czar, not quite 40 years old. And that was shortly after I was confirmed. I was pretty nervous, and I was damn intimidated by you guys and that were there here then. Some of you actually were here then. And the White House had told me, whatever you do, don't talk about gasoline prices. Because gasoline prices are political hot potato. I mean, voters vote on gasoline prices, and don't get up there and talk about. Now, I think it was Ed Cowan from the New York Times. I think it's still in town. They asked me a question, and of course, one of the first questions is, where are gasoline prices going to go? And I thought the ground rules of these things is that when you ask a question, you tell the truth. So I said, well, if you do everything that we're asking you to do, gasoline prices are going to have to at least double. You don't think that had an implication of how the White House felt about me after that? So it's taken me 25 years to come back. Thanks very much.
Thank you.
Okay.
Thank you for coming today, Mr. Zarb. I would also like to thank National Press Club staff members Leanne Bourne, Pat Nelson, Melanie Abdo-Dermont, and Howard Rothman for organizing today's luncheon, to the National Press Club Library for their research. We're adjourned.